Hi there, traders. This is Brad Gilbert with the week ahead preview. All right, now coming into obviously Halloween Monday, we've got the start of a new month kicking off with November, and like the first week of every month, this is probably more action-packed than usual with the Fed interest rate decision on Thursday there ahead of the non-farm payroll. So let me just give you a look, because don't forget, we've just had it's not a strange week. I've had a few people sort of contact me and say, look, what happened last week? The equity markets were going up like a squeeze. The last week of the month, right? There's not a lot of US numbers. We've been seeing US dollar strength through non-farm payrolls, inflation numbers, etc., every month. So the first 2 weeks you see strong dollar momentum, and then it starts to sort of fade a bit in week 3, week 4. You see it, if anything, it gives some of that ground back, and that's exactly what we've seen across the board. But now we're ready for strong dollar again. So just bear that in mind. Now, equities finished the week last week strong. You can see on the open here, US equity futures are down. We are seeing a risk-off profile, very clear, right? Euro, sterling, Aussie, Kiwi down. The dollar pair is up. It's as clear as day. So this is something you should be looking for. It's a nice start to the week when you see the Asian market connect after a weekend where there could be random news. You see it reconnect quite nicely, and everything's fitting into place, I should say. All right, so let's just have a look here. Now, there's a couple of things to just have a look at. If I just bring you over to the charts. As I was saying, just looking at the currency markets, right? You see that dip down here in the dollar index. We've got a sort of new short-term support line just under 110. This is just a bit of a, I like to sort of call it a flush out. Okay, just a flush out of old style positions. Dollar Swiss trending higher, dips down with the dollar index. Dollar yen was the real sort of weird one last week, where everyone was sort of putting their hands up saying the BOJ is intervening and all these sorts of things. There's a bit of a shift in the treasuries. So I don't know what's going on exactly, but dollar yen is not going down just yet, right? The strong dollar, if anything, it's a bit of a recharge again for potentially the dollar move to the top side against a neutral pair like the yen. Dollar CAD, well, just drifting lower. Oil is the tricky one here, right? So back at $87, it's sort of up, down, up, down. It's found a bit of a home around in the mid-80s. Oil depends on what happens there. Don't forget, we've got the Canadian employment numbers come Friday as well, and I'll go through all the data in a second. But Euro, this is a really nice clean out to the top side on Euro. To me, strong US numbers. This thing's back down here at 97, 96. Again, sterling, change of PM. Once again, bit of a clean out from the short Liz Truss stint as PM. Sterling's got a few things looking up, but once again, the dollar will determine where it goes from here. Aussie, nice rebound from 61 up to 65. Is it done yet? Well, I don't know. The RBA, I got to think that they'll raise rates tomorrow, even though it's the big race day tomorrow. And the Kiwi, well, it's just sitting up there following the Kiwi just above short-term resistance. It's really hanging in the balance. But the thing is here, just looking across all these currencies, right? When you come into the data, and I'll show you that in a second, there's numbers coming out on pretty much every instrument, right? So everything's going to be active. All separate countries have key economic numbers coming out. Equity markets are going to be active. We've got the Fed, etc. So just bear that in mind. And if I just bring you back over here to the global markets, give a look at the global markets charts. This is what we're looking at. Like the Dow Jones had a nice sort of pullback. The NASDAQ, okay, going like a bit of a bounce. And with that risk-on profile, we saw the cryptos, okay, seeing a bit of positive signs of a bounce. Now, these moves draw a line in the sand because now it comes back down to the data, right? We've already been through the dollar index, Euro with that sort of short-term move. Gold, well, it's settled down here again. It tells me the market's not sort of too concerned about too much just at the moment. If anything, they're unloading dollar positions. And you can see here, oil, well, as I said, it's been drifting sideways in the mid-80s. Be nice to work out whether it's going up or down. Commodity index, well, it's going up. The oil is a big part of that. So let's just have a look. Now, we've seen the technical side. That last week of the month, as I keep sort of saying, is key, because you see, as I said, the dollar's been driving the markets for like the last year, right? So strong dollar fades in that last week. and now it recharges, ready for another crack to the top side. So if we just have a look here at the data, right? If I bring you back across screens now, just having a look here, right? There's the Chinese data. Okay, it's about time that sort of stuff started to really impact. Chinese data, very important, very close connection with the Aussie and Kiwi. So if there's any sort of significant changes there, you'd expect it to actually impact there. If anything, the numbers are a little bit weaker. Aussie and Kiwi sort of drifting at the moment. Nothing major, right? There's so many opportunities coming out this week that there's no need to rush in to these like tiny little numbers that might create a 10 or 15 point move, right? So just having a look here, coming into Monday trading, it's a nice start with, you got GDP numbers and some inflation numbers out of the Eurozone. Okay, worth having a look at, of course. Have a look at the previous number here on the GDP growth year on year and what the consensus is. So they're expecting a big change there. And that could just be one data anomaly that screwed up the numbers last time. But you wouldn't imagine those GDP numbers being that strong. The key part for Europe would be, if anything, even though it's the Eurozone number, not Germany, would be the inflation numbers, right? So keep an eye on that as you go. You come into Tuesday and we get the first of the central banks coming up. We get the RBA rate decision, right? So the consensus is for a 0.25% increase. Don't forget, we had the Aussie inflation numbers, I think it was a week ago. We had really strong numbers, once again, forcing the RBA to raise interest rates. This is where it gets interesting from here, because another interest rate hike there, you start to put a bit of a squeeze on the housing market, and that could really destabilize the economy. So interest rate hike there, the statement will be key, right? I keep saying this all the time too. It doesn't matter if it's just the RBA, the Fed, the RBNZ, or whoever it might be, any central banks, when there's speeches or press conferences and these sorts of things and statements, they're very hard to trade, right? They can be a bit ambiguous, positive on one aspect, negative on another, and the market could gyrate. Don't get caught up. If you're not certain of where it's going, sit back and just let them talk, let it evolve, and then look for the trading opportunity. I've seen a lot of traders jumping in on the first comment, right? And usually the first comment is not the right one, right? Usually they'll say, right, oh yeah, we had to raise rates. Inflation's going through the roof, and then everyone buys it, right? Then they'll come out with, but housing's weak, everything, all these other sectors are weak, and then it sort of starts to fall. So don't get suckered into trading these central bank announcements, right, so aggressively. Now, as I was saying, all these there's data here across the board. Wednesday, Kiwi employment numbers. There's an RBNZ press conference there as well. Balance of trade data out of Germany. I don't think that's a number. Employment figures would be something more I'll be more interested in. And then as you go through Thursday, we get the first of the US numbers. Don't forget, this is not a true reflection of the non-farm payrolls Friday, but the market, depending on how the market's positioned, it can lead the market into a bit of a move, right? Especially if there's significant variance in that number. Crude stocks, definitely worth having a look at. Now, obviously the Fed, sort of Wednesday, okay, in North America, it's going to be an important decision. 0.75% factored in, right? So that's the move. Now, once again, the statement, so 0.75 factored in, what are they going to say? Are they going to say we're going to keep an eye on the data, or that's it for now and we'll see how the next couple of months rolls out? That's the key to the next move. I think we'll see a bit of a dollar strength leading into it, and it will be the statement from the Fed that determines whether equity markets go up or down. Are we close to the end of their interest rate hiking cycle? I don't think so, right? If they're still raising 0.75% at a time, they're not close to the top yet, right? Like the RBA's last time raised 0.25. That means they're getting close to sort of getting to their sort of natural equilibrium. So 0.75 is by no stretch close to the end of the run. What you would be looking for is the central banks to come back and start raising by 0.25, and that's when things are starting to stabilize. Once again, Bank of England also 0.75% factored in. So another aggressive move. I think the strong that 0.75's partially factored in, obviously, to sterling. It's had a great run last week, and once again, the statement's going to be key to it, right? And all the central banks are a little bit nervous. So there's a little bit of concern, but they don't want to scare the market. So it's can be a little bit ambiguous, as I was saying, with those comments. Coming into Friday, you've got, there's a few bits of data there. Or say Thursday in North America, ISM non-manufacturing numbers, yep, can have an impact. But really, on the first week of the month, okay, it's a bit of a different one because we do have the Fed meeting on Wednesday. You come into Friday, and then we've got the double whammy, right? You've got Canadian and US employment numbers. That situation really makes the Canadian numbers very hard to trade. You either focus on one or the other, right? And the fact is, the US non-farm payrolls will impact more tradable instruments than the CAD. So it might be worth having a look at, unless, right, if the CAD's your favorite currency, you're in Canada, or you've got some connection with the CAD, well, then that's probably the pair. But don't forget, you've got to look for disparity between the two numbers here, one up, one down, to really get a solid move. If they're both strong, well, dollar CAD may not go too far. So that's something to think about. Every second month, we get the Canadian numbers by themselves. But this one, we've got the non-farm payrolls right there as well. And just as a bit of a sneak preview, when we're looking for the how this month's going to shape up, like the following Friday, right, we've got the US CPI numbers, right? So it's another full week or 2 weeks before we get the inflation numbers, which will tell us what the Fed are going to have to do next time. But for right now, okay, I think the Fed would love to be they may actually have the numbers, but they'd love to have the employment numbers ahead of their announcement a couple of days earlier. I don't know if they do or they don't. You'd think they would, or maybe they're still getting processed. But the Fed interest rate decisions obviously going to be the key event. It's the biggest event on a 4 to 6 week basis for the whole markets, global markets. It can shape the direction of equity markets, currencies, commodities, and a bunch of other things. So you're going to be watching that very closely. Risk on, risk off, obviously bringing cryptos into play as well. But like the week, once again, if I just go to the top here and just scroll down, there's so much coming out, right? As I said, you've got Aussie, Chinese, Japanese, German, UK, Kiwi, everything each week. And this is only on, don't forget, I should have explained, I've only got this on the medium impacting and above. So if I drop that back to low impacting and everything else, you're going to see a whole bunch of extra data. Now, you don't need to chase the market in this environment because the market will wait for these big numbers to drop, right? And that's where the direction will come from. So make sure you take your time. You don't want to get into by Wednesday and already be in a major drawdown because you're going to lose your ability to attack the market aggressively, right? So I'd be taking Monday, slowly get into Tuesday. Obviously, the Aussie dollar is going to be a major focus on Tuesday. We've got an interest rate hike already factored in, so make sure you understand that. It's going to come down to the statement. You get into Wednesday, there's a whole bunch of US mortgage numbers. We've got some oil stock numbers there as well. Then you got the Fed. Then you get into Friday. You've got, so don't forget the Bank of England on Thursday as well. You get into Friday, you got non-farm payrolls and Canadian numbers. Anyway, it's so busy. This is like, it's a shame they can't widen this week out to share the data across all the weeks because you really need to trade each of these events on their own. And some of them, they're coming thick and fast at you the whole time, right? So what you're going to do is plan the opportunities. Don't rush in. Make sure your capital management is structured to the opportunity. If you're trading one instrument, make sure the fundamentals, you're looking at the fundamentals the right way, right? And if you're looking for a clearer idea of the actual forecast here, I'm just using trading economics here as a guide. Make sure you go into this week's data. You can come through here and get News Squawk's specific numbers and especially the range of the numbers, right? That's the key thing a lot of traders don't understand. If we have employment numbers coming out, well, what's the low and the high expectations of the range? Because if it's outside that range, that's where you're going to see those significant moves. Outside of that, you can jump into the 247 trade zone, share some trade ideas and market discussions with other traders, and really start to pick the eyes out of it, right? as I said, this is the busiest week of the month as far as fundamentals go. Sometimes there can be too much data coming out and it's hard to process. What you want to be doing is looking at the US dollar, right? By just get my thing up here. You're going to be looking at the equity markets very closely, okay, especially after the Fed, see what impact they have. So strong US numbers would suggest put more pressure on the Fed, right? That leads to lower equity markets. I think what we're seeing at the moment is a bit of an anticipation this week. We, as I said last week, equity markets had a breathing space, no major numbers coming out. So there's a bit of a short squeeze on equities. That's about to sort of turn around as the market comes back into play. And what we're looking for is to really connect the dots with the equity markets and the currencies, and then see how those commodity markets are sort of shaping up as well. Keep an eye on the risk on, risk off, the safe havens, and why not keep an eye on the bonds as well. There's loads coming out, right? The secret to trading well is managing your capital and anticipating the opportunities as they come. So what I would be doing is get your journal out in front of you, work out what data, so the instruments that you have a close affiliation with, the ones that you make money on, circle those, right? And then circle the days where you think that you've got the edge, right? And you understand what's going on. And then you can start to piece together where the best trading opportunities are. I'd say Wednesday onwards, you're going to have a lot of good ideas about what's happening, right? Then obviously following the FOMC, we're going to have a very clear idea of what the next direction for the dollar is, and equity markets, global equity markets. That's the major focus. So make sure you've got that on your charts or on your journal. Get that into place. Obviously, the big head kicker, loud data is the non-farm payrolls, but the Fed will give us the answers before that comes out. All right, guys, that's it from me. Good luck, prepare, and that's the answer for making some cash in these markets. Cheerio.